What is up, wheel strategy traders? It is time once again to shoot another live trading video with Premium Pirates. And whether you're new to the wheel strategy or you've been doing it for a while, I just want to show you in real time how I use our tools, how I find the best stocks, and how I make sure I'm maximizing my premiums on all my wheel campaigns. So let's dive in. So first thing I always do is I like to take a look at, what the market is doing in general. I don't try to time the market with the wheel strategy, but I do kind of like to keep tabs on, whether we're in fear or greed mode. Is the market overextended, or, are we due for a pullback? Just to kind of gauge how aggressive I want to be with my wheel campaigns. I mean, again, I'm not really trying to time anything as much as I'm just trying to control my level of aggression. So to do this, I like to look at the CNN Fear and Greed Index. There's other tools that are out there. You can look at, the VIX or something like that if you like. But right now, according to this, we're in the neutral range. So I'm willing to be, maybe a little bit more aggressive. If we were over here in extreme greed, I might, only be willing to tolerate maybe like a max delta of 0.2. Whereas if we were like in extreme fear, I'd probably be willing to tolerate, a max delta on my cash secured puts of maybe 0.4, maybe even 0.5 if I was being extremely aggressive. I always just follow the advice of Warren Buffett: be greedy when others are fearful, be fearful when others are greedy. We're just trying to kind of take the opposite position of whatever the market is doing. All right. So, first thing first, go into the Premium Pirates tool. If you haven't used Premium Pirates before, we have this great wheel strategy screener that's going to let you find the highest premium wheel stocks in real time. So I'm going to go over to our wheel screener. I'm not going to throw in anything in the expirations here. Again, you can look at all the major expiration dates are bolded. You can go, through November of next year if you want. If you don't put anything in here, automatically we'll pull, the major expiration dates over the next couple of months. But what I want to limit it to here is, just popular wheel stocks. I have my own watch list set up. I have my own fair values. I've used the Morningstar fair value and entered it into that list. I want to look at discount to fair value, minimum of 1 star. Again, this is something that I would control, maybe depending on how aggressive I want to be. What is the overall market doing? I don't care so much about annualized return, but in the event that I do get stuck in a wheel campaign for a while, I'm looking at minimum return of 2%, right? Cash secured puts only, and strike price of max $50. A lot of what we publish on our channel and on our website, we talk about, trying to open a campaign with maybe like 5%, max 10% of your portfolio in any single position, never more than 15. And what you want to do is you want to leave yourself room to average down if you need to. What that would mean is, let's say I open a position with 5% of my portfolio value. I sell a cash secured put on anything really. And, the price goes down, the price of the underlying goes down, I end up getting assigned, and I'm starting to sell, covered calls to execute the wheel strategy. I might notice that there's another cash secured put that has a really good premium that's at a lower strike price than, whatever my basis is. And so I can open that up as well in a cash secured put. And if I get assigned there, it's going to, bring my dollar cost averaging down. It's something that you kind of learn as you're going, but for the purposes of what we're doing here, $50 is really about like 10% of the portfolio of this account that we're looking at. So I'm going to limit the high end of the strike price of 50. For max delta, I'm going to put 0.3. As I showed, the market's kind of in the middle right now. So I'll be kind of in the middle. I don't want to go too low, 0.2, or too high, 0.4. You just want to play it safe. Always blue chip, stocks only, large and mega cap. We're looking at 10 billion plus. And I like to look at no earnings. I think all things being equal, I would prefer to not have an earnings announcement on a stock while I have a cash secured put open. If you're just selling a covered call, it's not as big of a concern because you obviously already own the asset already. But for now, what I don't want to have is I don't want to have this thing move against me and I have a big gap between whatever my strike price is and what the price of the underlying is at expiration. I just don't want to be underwater on a campaign or on any position a lot, so that it's just going to take me a long time to get out of. If you're stuck underwater, your premiums aren't as lucrative as they could be, and your return on that capital that's tied up in that position is not as effective as it could be elsewhere. So it's for that reason that I like to look at when I'm being a little more conservative, no earnings announcements. If I throw earnings on here, or I say I don't care if it has earnings or not, you'll see there's some, more lucrative positions. Albertsons, for example, has this annualized return of 85%, actual return of 2.9. And that one actually doesn't have earnings till next month, so maybe that's interesting. We'll look at this more in a minute. But Carnival, here's a better example maybe. December 27th expiration, but earnings are on December 23rd. I mean, that's a lot of risk, even though it says the implied volatility is 55%. If you look at the IV percentile, it's high. It's on the high end. That means that 68% of the last year, of the days in the last year, the implied volatility was lower than it is now. I would shy away from this one because, it's only a 2.2% actual return. It's only a 61% annualized return. I say only, right? If we could get 61% annualized return, that would be great. I'd do that all day. But when I take that filter off and I say, hey, just show me stuff that's not going to be open through an earnings announcement. It does drop down the annualized return, but I can still get another position here, like on Norwegian Cruise Lines. It's like a 2.2% actual return. I hold it for a few more weeks. The implied volatility is all the way down to 44%. The IV percentile is down to 15%. It's just a much more conservative position for what it is I'm trying to do right now. And again, I just don't want to get my capital, my open risk tied up in a campaign that I'm going to be in for a long time. All things being equal, the sooner the expiration is on a cash secured put to today, the more kind of the more bites at the apple you have, you're compounding your interest much quicker, right? But you have to be cautious, or I want to be cautious against being too greedy and, just firing off into volatility constantly. I just want to be conservative in that approach. All right, so we got a couple of really nice positions to look at. I think that this Albertsons one came up, when I was looking at the when I had the earnings filters on. So, let's explore this a little bit more. So it is a 28% discount to fair value. I want to check the price on this just to be sure. Okay, so if I hop over to my watch list and I say, okay, I have the Morningstar fair value of Albertsons set to $25. If I go in, check out in Robinhood real quick, I have Robinhood Gold, so I get the Morningstar fair value. I mean, it is $25, so that is accurate. All right, so hop back over to Wheel Strategy Screener, scan again, same thing. That's really nice. The implied volatility maybe a little high at 67%, but for this stock, the IV percentile is really low. Only 10% of the days over the last calendar year has the implied volatility been lower than it is right now. The delta is below 0.3. I don't have any positions open here. This expires, a couple weeks from now. Looks like 17 days. It is trading at a discount to fair value, and it's an $18 cash secured put. We know Morningstar has the fair value at $25. We're accounting for the fact that Morningstar could be wrong. Something could happen here. So, but I like this position. So let's go ahead and. This happened to me a couple times recently. My video screen has covered my trade options button. Okay. So it was back there. It's behind the video. Sell a put on December the 27th for, what do we say, $18. Right. Just verify that all this information, lines up. Delta 0.27, 0.28, premium is 0.53. So it looks like, this one is moving pretty rapidly right now. So the premium is actually down to 0.4. The Wheel Strategy Screener does, it's very close to real-time data, but when things are moving constantly, it just kind of something to double check. All right. So for now, I'm going to actually pass on this one. I'll run the scanner again and the screener again in a second, but I just want to make sure that the premium aligns with, that return aligns with what I made. This looks such a nice return. I don't want to miss that opportunity, but I also don't want to firing off of something that's just moving so quickly for whatever reason that the premium is changing by the minute. So Warner Brothers Discovery is the next one we'll look at. And, if you've been watching my videos, I've been just hammering this stock on wheel campaigns for quite some time. I'll show you, kind of what it looks like. What the recent campaigns I've been running look like in this account. 3 campaigns recently. I had one from July to end of August, September, a brief one in September, another one in November. I mean, just constant returns. The reason for this is it's trading, right now at $11. The Morningstar fair value is $17. We're looking at a 41% discount to fair value. Implied volatility 54, IV percentile 26. I mean, it's been very affordable. I think when I started working on campaigns, it was trading at $7. So we don't want to go overboard, okay? So let's go ahead and look at this position. Let's verify that all this information is accurate. So February 21st, which is the date the earnings are coming out. Let's be a little more conservative. Okay, so this is interesting here because the actual return on that position of February 21st expiration is 5.7%. But if I look at a similar position in January, the actual return 3.3%, but there's only a 2% difference in the annualized return. And that's what I was saying is, the closer to today the expiration is, kind of the more bites you have at the apple, the higher the annualized return is going to be. So of these two positions, for me, I don't want to mess with this earnings date if I can help it, especially not for only a 2% increase in my annualized return. So let's look at this January 24th position. Okay. Oops. Button's still hidden by me. January 24th is what we're looking for here. $10, 25 return. It's pretty close, yeah. Excellent. Okay. All right. So I think this is a position I want to move forward on, a campaign I want to open up. All right. I don't want to put more than 5%, 10% of my portfolio value into it if I don't have to. If you're working with a smaller portfolio, obviously that's very difficult to say, hey, you can't put more than 5% of your portfolio into this position because if the total value of your portfolio is low, it really limits the pool of stocks that you can open wheel campaigns on, and you just might make decisions that you otherwise wouldn't. And so, this risk management, this diversification is something that you just have to build into over time. It needs to be a part of your process and part of what it is that you're looking at. But when your portfolio value is lower, just kind of figure out a way to make that work for you, and just, again, diversify. Don't be too aggressive. Don't go YOLO on one position. Okay. So for me, this is good. We're going with this one for now. I want to get the right account. I have a couple different accounts that I'm working with here. I'll put on January the 24th at $10. We're going to go with one of these. Submit. I wish I wasn't hiding all this, but it is filled. $24 in premium. Mine for forever now. All right. What else we got here? Norwegian Cruise Line. All right, we got a 21% discount to fair value. Again, I only look at wheel campaigns with cash secured puts that are trading at a discount to fair value. I don't want to overpay for anything. And Morningstar could be wrong. That's part of the reason we look at risk management diversification. We have to account for the fact that I'm going to be wrong, you're going to be wrong, Morningstar is going to be wrong. The market could change. And you just need to always account and control your position sizing so that you can be wrong and you can recover and you can get out of these positions. This is another nice. January 10th, $25, 29% annualized return. Let's go look at this guy next. Okay. All right. So this one is January 10th at $25. Really nice. Very nice, very nice. We are going to move forward with this one as well. And that is filled. Another almost $47 in premium collected. All right. I've got a little bit more cash here to work with. Okay, MGM. 31% discount to fair value, implied volatility of 37%, IB percentile 30th. I mean, this one really lines up. Like, I love it when they line up like this. This is really nice, above 2%. So let's look at this MGM position. This was the 10th, right? Sell, cash secured put. And I always open my wheel campaigns with cash secured puts. 10th, $25. 25? That doesn't sound right. $25. Sell, put. Oh, that's the one I just opened, sorry. MGM, here we go, $35. I'm sorry, I was looking at the wrong line. $35. Delta looks good. Let's go with this one. And that one's nice, $62 premium on that one. Filled at $62, right? DraftKings. I would be a little bit nervous about MGM and DraftKings together. At some point, you do want to be concerned about your sector risk, and holding two assets that are highly correlated, DraftKings and MGM. I think their performance is going to be highly correlated without even looking. I mean, I'm just making that assumption. I can do some more research, but it's like you're actually increasing your risk exposure to that sector. And again, like if something happens to that sector, if you're wrong and you're not well diversified, you're overexposing yourself to risk. It's just something we constantly have to keep an eye on. So for now, like I have a little bit more cash, but I'm a little gun shy at this position. So I took the position with the higher annualized return, right? Even though that the actual return was a little bit lower. And my open risk is going to be lower. I opened 3,500 in risk versus 4,000 in risk on this MGM position. Okay, so do we have anything else here? So Pinterest is another one. Let's see if I can move this. 30% discount to fair value, 36% implied volatility, 24%. This one's nice. This one's a nice position. I think I like that one too. So we're looking at January 24th, $30 put. Delta 2.26. Yeah, this is a good one. And we are filled for $3,000 in open risk. We just got about $65 in premium. All right, a little bit more cash available to trade with in my account. Let's see if there's anything else that looks interesting to me on this list. Let me look at the risk I've got open for Warner Brothers right now. Warner Brothers Discovery. So I've got $1,000 open risk. 2,500 would be 5% of my portfolio for now. I can open another cash secured put on Warner Brothers and feel comfortable. Okay. So I opened this one before. I looked at January 24th. Obviously, we excluded the February 21st just because of the day of the earnings. But let's say, here's another one. So I could go two routes here, right? I can open up another contract on this position, January 24th with a $10 expiration, or I could look at, the 17th, the same strike. Here's the question, right? Is this has a 3.3% return, 30% annualized. This has a 2.2% return, 24% annualized. Like all things being equal, this is a better position. The actual return is higher, the annualized is higher. It just is another week. The volatility metrics really line up with what I like to look at. I'm going to go ahead. I want to open another contract on this one. So let's look again at Warner Brothers sell a put on 24th at $10. All right, so I'm opening more risk. I'm in the wrong account again. I'm opening more risk on Warner Brothers Discovery, but it is, I have thought through it, right? It's not more than 5%, definitely not more than 10% of my portfolio value. So 24th, right? 24th at $10. Actually, before I do this, let's go back and let's look at this Albertsons position again. So I'm going to go ahead and hit scan. It just feels like this one's moving. Yeah, see, it disappeared from the list this time. The underlying price of Albertsons was moving pretty quickly, obviously at the time shooting this video, and just the premiums were fluctuating pretty rapidly. So I'm glad I checked it, and that's the reason we want to double check the accuracy of this information. We pull all of the premiums from all the strike prices in real time. I mean, this is literally hours and hours of research. Even if you did this research by yourself, like by the time you calculated all the premiums and the actual return, the annualized return, you can see the price of the underlying changes. The tools that we've developed, this wheel strategy screener at Premium Pirates, like it is really going to help you take your wheel strategy trading to a completely different level. There's just no way you're going to be able to get premiums this high controlling your risk the way that we are. It's too much manual labor. It's too much. And I think that, even though when I looked at that Albertsons position, it looked kind of wonky, right? We looked at, the results in the wheel strategy screener and we checked the actual position. It didn't align. And so I just made a note like, hey, let's come back and check this out. And that explains why. Is you just don't want to fire off without validating the data. But this research tool is it's going to save you hours and hours and hours. And if you're already trading the wheel strategy or you want to trade the wheel strategy, I've yet to find a way to get this kind of return with this kind of research and this kind of information. There's just not another tool out there that's designed for this. So back to what I was doing. I want to open up another of these, fire this off, hit submit. And another $22 in premium is collected. Very nice, very nice. One of the things that I look at after this, I usually look at my account to see, hey, is there any open covered calls that I have from wheel campaigns where I've been assigned on the stock that have returned, like I'm at like 80% profit. Because if you're at 80% profit on a covered call, the odds of the price of the underlying rising to a point where you're going to get assigned on that, your shares are going to get called away, is very low, right? Once we get to 80% profitability on any position, like it's probably time to go ahead and close that covered call down or roll it or move it or whatever you want to do with it. I don't have any right now. Looking at the account, I thought I had one yesterday, but it looks like the price of the underlying is doing some pretty strange things today, so we don't have anything. All right, so if you haven't already, head over to premiumpirates.com. We got a free trial. You can try all these tools for free for 14 days. Use them as much as you like. There's only one side of what we do. The wheel strategy screener is, obviously you can see here how valuable it is. But I used a little bit. I showed you a little bit, just a small taste of what the wheel strategy tracker can do as well. You can track all your campaigns, track your closed campaigns, show your premium over time. The tools that you have at your broker they're not designed for the wheel strategy, obviously, and they're not even really designed for option sellers. If you try to any other trading journal out there, it might feel like you're trying to force it to do something it doesn't want to do. Like this is a tool, a tracking tool designed by wheel traders, for wheel traders, a very specific purpose. Again, go over to the website, try it free. If you like what we're doing, it helps a ton. If you subscribe to our channel, if you like this video, tell your friends, sign up for our email list, whatever it is you want to do to help us get the word out, and just, keep us going so we can continue to build these tools out and build more features and, make this really even more powerful. So until next time, I want you guys to get out there, do some premium plundering and some market rating, and we'll see you soon. Thanks so much for watching.